India is more of a service economy. The key strength of India is, or the key sort of component of Indian growth is services and primarily IT and a little bit of an export. Pharmaceutical is a very niche segment. Indian companies are very good in the global research on the pharma side, and they get the CRM market. They are very good. So it's more on that front. Plus you obviously have a very under penetrated banking sector. So anybody you talk in India will ask you to invest in the private sector bank. It can kind of double in the next 2 to 4 years, because the loans are growing at 15-16% easily on an industry basis per year. So India is different. India has a democracy. It has it's a commodities scarce country. It imports oil. It imports most of the other the vital commodities. Vis-a-vis, this region is more of a commodity exporter. So it's very different. It can be a very good mix as a diversification play if you have both of them, and therefore we always like to combine MENA and Asia, because Asia is more of that nature. It's more services, whereas here it's more resources.
And if you were to, I know you invest in Asia as well as in the Middle East, if you were to look at the whole opportunity set in emerging or frontier markets, which country are you most excited about to study, or even what investment theme across countries are you most excited about?
Look, I mean, China, India and Indonesia are the most very well considered places to invest for the next 5 to 10 years, primarily because of the population, because of the demographics. Except China, India and Indonesia have democracy. China growth is government-led. India growth is more domestic. Even Indonesia growth is very much domestic. Plus, they have very good resources. They have natural resources. So these are the three countries are very exciting from a medium to longer term perspective.
And that would certainly speak to their fundamentals. But what about from an investor's standpoint? When you look at whether those fundamentals are actually reflected in the stock prices,
yes,
where would you then say is
yes,
the best opportunity?
That's a very good question. All three countries look promising, but India and Indonesia have done very well over the last 12 months or so. India more so in the last 6 months, but Indonesia has been doing exceedingly well. So people have valuation concerns there. Contrary to that, China hasn't done so well. It was very lagging market the whole of last year. Only last 2 months it has started to perform. So from that point of view, as a market timing perspective, I think China is more appropriate.
And in the Middle East?
In the Middle East, Qatar, because Qatar did not do well last year, did not do well 2011.
I guess if you look at if one were to look at the peaks of the stock markets in 2006-07, which countries are the furthest off from those peaks? I imagine one would be certainly Egypt.
Yeah, but I would say in the Gulf it will be mainly Dubai and Qatar. Bahrain, I don't call it a stock market because it's very liquid. But Dubai and Qatar would be, or UAE and Qatar would be more of.
How far are they off the peak roughly? Do you know?
I don't know off the cuff, but they should be around 50% of the peak.